The underweight Japan and emerging markets. Do you think that Japan, the big rally, is through? We're just looking at inflation continuing to move higher. We're looking at that very strong GDP number. In the emerging markets, you figure a lot of them have peaked in rates and they're starting to cut. So why are you underweight there?
So, I mean, I think so. Where we are now, and after the 20+% rally this year, Japan is basically at long-term fair value in terms of valuation. But obviously, there's a lot of dynamics going on, and the backdrop is, Japan is a market where you typically get long periods of nothing really happening, and then short, sharp periods of outperformance. So, for that to continue, you need to argue, or we need to see that this time is different. There's been a couple of catalysts, the Tokyo Stock Exchange, pushing companies to lift valuation, which has resulted in a lot of big one-time buybacks. That's helped. We had Warren Buffett in Japan in April, which got a lot of press, and everyone wondering what else he's going to buy besides the 5 trading companies. In fact, all he bought was more in those 5 trading companies. But what we really need from here, probably, is domestic households to start investing in the market. That's one thing on the retail side. And then also, I think, there is a case to be made that outflows from China, Japan market has probably been a beneficiary of some of that as well. So there's quite a lot going on in Japan against a market that's trading at long-term average valuation now.
Kieran, I just want to get across something that we're noticing happening on the Bloomberg terminal right now. The Korean won depreciating a further 0.8%, now heading towards a year-to-date low, 1338.76 against the greenback at the moment. Can you just unpack for us what's going on here? Is this a story of dollar strength, or is it more a case of China casting a very long shadow over the region, or is it a bit of both?
Yeah, I think it's obviously a bit of both. So, Korea quite closely tied economically to China, so that's not helping. Also, people tend to look at the won and the yen together. So yen strength against both of those is not helping either currency. So I think those are the dynamics at play in Korea. A little bit stuck in the middle between China and Japan.
Yeah, and in terms of China, I mean, the market waiting on something more than piecemeal policy approach to the problems there. But to what degree is this void of policy a case of politics?
I think it's all about politics. So a lot of what's going on is self-inflicted, and therefore a little bit hard, given the structure of politics in China, a little bit hard to reverse course. So I think things may have got a little bit out of control. The policy is obviously incredibly inward focused, and in China, the market obviously is waiting for a stimulus bazooka, but the government does not seem that's going to be the way. As you said, piecemeal is more the approach at the moment. The investors are obviously becoming much less interested in China, despite the fact that it's extremely cheap. And again, I think that Japan has been a beneficiary of that in terms of flows.